Hello friends, you must be following news where there is a lot of talk about SVB Bank. Is it the repeat of 2008 Lehman crisis? What is going wrong? What has happened to the bank? Let us try to understand the reasons for failure of this particular bank and what is causing that thing, and is it the repeat of Lehman crisis, right? Now for that we have to go back to 2020. 2020 is a year which none of us would forget because of the COVID pandemic. At that point of time, a lot of governments infused money, startups were raising money, money was available more easily because the governments wanted consumption to go up, government wanted expenditures to go up, and money was being printed left, right, and center. So, as money is printed, as money is available with the depositors, as money is available with the companies, what they started doing is, say this is the bank, you have depositors, you have startups. Okay, just for our understanding, I'll just take these two parties. They started depositing money in this particular bank, and this bank also started giving a lot of loans to startups which were risky. So because I have a loan account with the bank, I'll also deposit the money that I collect into this particular bank, right? So this bank started collecting deposits from all these depositors and startups and started giving loans and all of that. So in 2020, when the deposits were $60 billion, when we reached 2022, the deposits went up to $200 billion. So a huge increase in the deposits. And please remember, money is raw material for the bank. What does bank do with the money? The bank lends this money. The bank lends this money to others so that they can earn interest and they can pay back the deposits and deposit holders and also the shareholders. That is what the function of the bank is, right? So you have deposits which went up significantly. Then when you have extra money, what will you do with the money? What will the bank do with that money? They cannot keep it inside their locker. They have to deploy it. So they started deploying by giving loans to startups, risky loans. That is one angle. And because enough avenues were not available, they started purchasing government securities. So apparently the government securities portfolio was about 27 billion here in 2020. This went up to $128 billion by the end of 2022 or in the first quarter of 2022. Now you might be asking, sir, risky loan I understand. What is the risk with government securities? Now here comes the interest rate risk, which you would have learned as a part of financial management. A huge risk, which is interest rate risk. Now what is the risk? See, in any market you take about, if interest rate goes up, the price of securities comes down. If the interest rates come down, the price of the security go up. Now way back in 2020, interest rates were low and now the interest rates are high. You must have been following, Federal Reserve hiking the interest rates, RBI hiking the interest rates. The rates have gone significantly. Assume for a moment, rate was 2% then, and today the rate is, let us say, 5%. And if you look at a 20-year bond with a coupon of 2%, then the value I've just computed, you can also compute on your own by taking the present values, right? So if it is a 20-year bond, if it was 1,000 rupees then, today the same bond at 2% with coupon of 2%, if you issue today and the rate in the market is 5%, the 20-year bond would only fetch you 626. So that is the amount of reduction. That is the amount of reduction in the value of the bond. Now what is the problem with this particular bank? Investments are made in government securities. As interest rates rise, the value of the securities start falling. Now when the value of securities start falling, you are staring at a loss. That is one problem. The other problem is, this easy money which was available here in 2020 is no longer available. It's not available so easily. Startups are burning money. They need their money. They need money back from the bank to for their operations. They might have credit lines with this particular bank. They might want to borrow more. Now to lend money or to pay back the depositors, you need money. See, if somebody, for example, has put 1,000 in the bank, this 1,000 is lent to somebody. Let us say 800 is already lent, and today if this 1,000, the person who has deposited 1,000, if he comes back and says I need my money back, what will you do? You will go to the borrower and ask him to pay 800. But if the borrower is not there, or if the borrower has an agreement that it will be paid after some specified period, maybe after 5 years, 7 years, 2 years, 3 years, whatever it is, today you cannot demand from the borrower. Now what is the other option to pay money back to the depositors? The other option is to sell the assets that you have, which is government securities. Now to sell the assets that you have, you are already at a loss, because as interest rate rise, the prices fall and you are looking at a loss. So what does the bank have to do? The bank has to sell these securities at loss. Now these securities are sold at loss. When the securities are sold at loss, bank would obviously need that amount of money to recover the loss or to make good the loss, right? Because for example, 1,000 of deposit is given as loan to somebody, 1,000 only, let us say, or it is invested. Okay, now if this 1,000 is invested, today if I can fetch only 800, how will I pay balance 200 to this particular depositor? I need money. To get the money, I have to raise money from the market. So this bank went to the market for raising money, which did not work through, or which failed because of the concerns around interest rates and quality of assets and the fall in the value of the assets in the particular bank. So I need this 200. I go to shareholders and say, okay, I want to sell some stake. Please give me money. Shareholders say, the value of your assets are at risk. They are at low interest rates. Currently, the market interest rates are higher. So, we will not put money broadly. Okay. Now, when you cannot raise money, what happens? You are not able to pay these deposit holders. Then, it is not only one deposit holders. There are thousands and thousands of deposit holders. If I don't get money from my bank, I will go and tell to other deposit holders saying that, boss, please withdraw money. Your money is at risk. So same thing happened. The venture capitalists, the startups and all of them now wanted to withdraw the money because there is a risk. Now when all of a sudden everybody goes to the bank to withdraw the money, the bank doesn't have money. Why? Because all the money is stuck in the loans and deposits. And another thing with the bank, if you remember, there is this multiplier effect. If it takes 1,000 as deposit, it will lend 900. This 900 again comes back to deposit. Out of this 900 again it will lend 800. Again it will lend 810, considering 10% reserve requirement. Like this 1,000 will be lent multiple times, 900, 810, it keeps on happening. And it is lent to many different people. Right? Now, if all of these deposit holders suddenly come and say, I need my money back, then there is a trigger, there is a chain which happens, and everybody starts demanding for money. The bank doesn't have money. When the bank doesn't have money, there is a liquidity crisis. And because there is a liquidity crisis, the share price starts falling. And that is what has happened. And that is where the government intervenes and has taken over the affairs of the bank, and whatever is covered with insurance, that will be paid, other money will be lost. Now apparently a lot of startup companies, lot of tech startups, they have their money kept with this bank, and unless some other bank takes over this bank and bails out everybody, they might be staring at losses. Okay, so the cycle, what it works is, it's a cycle. So you have deposits at low rate. So you have maybe lent or invested at low rate. Then what happens? Interest rate goes up. If interest rate goes up, there is loss in value of assets. When there is loss in value of assets, these deposit holders, they see a risk, so they want withdrawal. When they want withdrawal, they go running to the bank and say, please give my money, please give my money back, please give my money back. Bank doesn't have money to give them back. So it results in change. Then what happens? The investments are sold. If you sell investment, suddenly there is a distress sell and the value again goes down, right? So this is a cycle, vicious cycle what we call, and that results in the trouble that we are seeing in this particular bank. Is it the next Lehman crisis? It doesn't seem to be a structural problem as of now, but then if a couple of more banks come up like this, then maybe we might be looking at a larger crisis. I hope you understood the overall concept. If you have any questions, feel free to drop in the comment box and we'll try to respond to them.